Hello, everyone. My name is Lucian. Most of you know me from Twitter as Triangle Investor. In today's edition of CEO and Market Expert Interviews, I'm glad to host Joe Mazumdar, editor of Exploration Insights. Joe, welcome to my show.
Well, I thank you very much for the invitation. I appreciate it.
Thanks for coming. Your name is known in commodity investing, but nevertheless, give us your origin story, your background, since you are for the first time in my show, and tell us more about the Exploration Insights.
Okay, you make me feel like a Marvel character. Uh, yeah, I mean, I'm a geologist originally. I did my undergrad in Canada in the Alberta, and I worked a little bit in the Arctic and British Columbia and the Yukon. But most of my work has been outside of Canada, in geology, Australia, where I did my first master's and worked in the Mount Isa and worked in a mine there. A gold mine there, and then I moved to Argentina to work with a major diversified miner, RTZ at the time, and worked for a few other companies in Chile, Peru, and Ecuador. Then we left Argentina in I think 2000, and then I went back and did a second master's of mineral economics at the Colorado School of Mines. Then I became more finance sort of a person and worked in marketing, markets, copper market, moly market. I traded commodities and that for Phelps Dodge out of Phoenix. And then I moved back to Denver to work for Newmont, corporate development, strategic planning, that sort of stuff. And then I came back to Canada now it's about 13 years ago, 2010, to work as a brokerage analyst for 6 years. And then I took over the letter from Brent Cook in 2016, and I've been doing that ever since.
Are you still in good relations with Brent?
Yes, we talk a lot. I mean, I've been writing the letter, and it's all my recommendations, good or bad, that go into it. But we still talk a lot about what we're seeing. What do you think about this company and stuff like that. Yeah, that sort of relationship has not ended.
Okay.
Nor do either one of us want it to end.
Let's cover some commodities, and those are five written behind me: uranium, gold, silver, copper, and lithium. But let's start with your portfolio allocation. What commodities do you hold in your portfolio at the moment?
Well, I mean, we had a lag of still a lot of precious metals from grassroots exploration and previously production. But when I saw the margin compression with some of these producers, I backed off on producers. So I've got, a few developers that I think, should be part of the M&A resurgence, hopefully next year, and grassroots explorers, because that's really where the big alpha is. And then what I've been selling has been ones that have been more elevated financing risk in this market and very expensive to operate, and looking at more so copper and copper grassroots exploration developers, some producers, because that's a commodity I'm keen on. Uranium exposure, we've got the same company we've had for almost 4 or 5 years. Lithium, I'm not convinced still, even though I missed a few. I do have an explorer that has lithium, so I didn't want to go out and buy a lithium stock, but if it was already in the company, a prospect generator, and it made gains from it, I obviously had no problems with that. And also a bit of nickel.
Okay. Joe, is this a good time to be a contrarian / speculator, or maybe have more conservative investment approach? What's your take?
Well, I mean, the market is very volatile, so it's hard to know which side to be on. Every individual is different in terms of how much risk they want to take, because investing in this is highly speculative. And you get into the more speculative of the speculative if you're just doing exploration and not doing production and stuff like that. And then you layer on the financing risk right now, in terms of companies actually going to the market. So do you buy in the market? Do you wait until a private placement? that sort of stuff. And so it's not for the faint of heart still, but right now, obviously, we're having a pretty good day. Yesterday the Fed was sort of indicating it might be, cutting rates maybe
Yeah,
next year,
yeah,
which is what the market wanted. And so I do see a positive for gold with respect to peaking with respect to real rates. And what I've noted in my time covering the sector is that it doesn't have to be the absolute real rate that drives the gold price. It's not like, oh, it's -2, so gold should be this, or it's +2%, it should be that. It's more the trend. So if it's, -2%, but going positive, gold's going to go down. If it's +2 or 3% and going down to 2 or 1, gold's going to go up. And that's really where we're seeing, the reaction with gold. But gold obviously has done well this year, despite, rising real rates for most of the year because of central bank buying. But those central banks don't buy equities. They're not interested in the equity markets. So for me, if in institutional equity and people that are generalists get into gold, then that should spill over into equities, going from production, developing down to exploration, and sort of not only lift all boats, but improve
yes.
sentiment is really something we need.
Okay, yeah, it makes sense. Uh, Joe, is there a commodity that you keep a close eye on and that you don't have it in your portfolio?
Oh, that I keep a close eye on. And I mean, I watch lithium, even though it's not technically in my portfolio, and watch it with my concerns about high cost production being very economic right now, but lower costs of production potentially coming on with the application of direct lithium extraction on brines and sediments in the southeast US that Exxon's looking at. That could change the fabric of the market,
Yeah.
going forward, and make higher cost projects less viable. As there's more potentially lithium available. So I do watch some of that. Rare earths as well. I do have that but I'm not. It was already in a company.
Mhm.
Uh, because you can get rare earths from a lot of different deposit styles, and that's really the issue with critical minerals that people got to know, as a lot of the stuff with the critical minerals is more about processing than it is about mining.
Yeah.
It's whether you can actually process to a product that people will want. Technical grade products don't really get the kind of price you want. You want to be able to get the processing right, and that involves a lot more technical work that not everybody has access to.
Yeah, agreed. Let's cover some of my five. I want to start with my favorite, actually the one that people actually know me about, and that is uranium. What's your thought? What are your thoughts on uranium, investment rationale for uranium? Tell me more.
Yeah, well, uranium, we've been waiting for a long time for the overhang of global inventories to be reduced such that we can start seeing some contracts being signed, long-term contracts being signed, because the spot price at some time, was doing quite well because people didn't want to sign long-term contracts because they didn't want to get trapped like last time when the price went down into $75 contracts anymore. So they just bought on the market. And then at that time, there was a lot of stuff coming from Russia. But also what we got to understand is that, there's different uranium products and what comes from enrichment and all that other
Yes.
stuff. And what I noted was that Cameco, was more keen on going downstream into the European market, where they saw that there was an opening as the Russians were basically being excised from that market, rather than acquire some development projects, and build up their, production portfolio. Because I think they've also got development and other projects that are on, care and maintenance, waiting for the kind of prices we're getting now. So if they can sign these long-term contracts, they already have stuff that they could bring on pretty quickly. It's the development projects that will be, interesting with respect to how they're funded, because now, like those projects in Saskatchewan can't get funded by the Chinese anymore.
No.
So who's going to come in? And then when you have the biggest producer, Cameco, actually going overseas to work on downstream, it sort of sets up a little bit of a quandary in terms of how these things get funded. Knowing that now, with COP28, now everybody's keen on uranium, which Chinese were always keen on. And so where are we going to get that? And now the Chinese have to look where they can actually get their uranium, because they can't get it from everywhere.
And Joe, how much of your portfolio is uranium?
Very little, very little. I mean, it's just one company. I haven't like gone nuts and added a lot more. I mean, but that company has done well and outperformed the URA, and so I'm happy to hold it. The problem that with the development ones is just what I told you, is I don't know how those get built and who funds them. If I wanted leverage, there are those companies that own uranium and they bought it at 50 and now it's 80, so they've done quite well. Or Cameco in terms of the downstream, because I think that will be a big thing coming forward, because now they have a comparative advantage in Europe because the Russians aren't there anymore. What should be interesting is does Kazakhstan have any issues? Can they take all of the Kazakhstan stuff still? Because ESG wise, they do things in Kazakhstan that potentially they couldn't do anywhere else in the world. And can a power plant in the US buy from Kazakhstan, knowing some of these environmental impacts of their ISR operations?
Okay, but that said, Joe, are you considering to add maybe a little bit of uranium in your portfolio? And would you prefer explorers, developers, or production companies, or even more conservative like ETFs?
Yeah, I mean, right now it all depends how much time I have to watch the market, and so that's why I've got a company that can restart their own operations and are already permitted to go. Exploration obviously requires a lot more digging, and I think that there's funding for exploration, but whether it's the right exploration project, because now we also have to think about the Inflation Reduction Act and all these, where are we sourcing stuff? Is that going to go from critical minerals to the uranium sector to the copper sector? I don't know. And so we got to be very careful where we think about those explorers in their jurisdiction.
Okay, let's get to gold. What do you see in the gold space right now? Is this good time to enter? Gold is at all-time high, and some stocks are almost at near of their 52-week lows. Where is the disconnect here?
Well, like I said, I think the disconnect is related to the fact that gold was well supported by central banks throughout the year. So gold, if it wasn't supported by central banks, gold would be a lot lower than it is. It would be like what happened when it peaked last time and then came down to almost $1,000.60 or something like that, because people said, oh, well, there's nothing here. Gold's going to go to zero. But that didn't happen this year because of central bank buying. And so now all those people that weren't involved in gold and actually were selling, because we had a lot of divestments in the gold ETFs, especially in the US, because in Europe, I think gold hit new all-time highs because, in terms of currency, it was really only the US that it went down. I mean, that it still went up, but it didn't go up as much as Europe and some other currencies. So for the gold price itself, that's not the issue. It's the equities. And the problem, I think, is that the people that were investing in gold, which were the central banks, don't care about the equities. And so none of that spilled over into gold equities. And I think now that gold price is going up for all the right reasons with respect to real rates coming down, that is and will spill over into equities. Like we're thinking about the longevity of this, and I think the longevity of this, that real rates have peaked in this cycle is the last meeting, the last interview with Chairman Powell. That indication was that hey, we're having an impact on the unemployment rate. We're having an impact on consumer price expenditures. I mean, sorry, consumer expenditures, personal expenditures, and so now we're impacting the economy. And so how much more do we want to impact the economy and not tip this over into a recession? So all of that sort of suggests to me that gold is a good spot. I mean, not so much gold. I don't need gold to go up 20%. I just need equities to catch up, because everybody will look at gold and go, wait, look at the equities. They're trading. And I've seen that with subscribers. I had a subscriber come in and say, I think this market's a generalist, that signed up for the letter and say, well, I've got, almost 100 million to deploy into the sector because I think this is poised. And he's actually looking for the leverage place. He's not looking for the quality low all-in sustaining costs. He's saying, well, I want the ones that are really at the money. And so these guys are betting that the gold prices, that this sector is going to turn.
Yeah, but there is one more beaten equity market for one commodity, and that is silver. What are you seeing for silver down the road? I mean, for the equities.
Yeah,
similar as gold or different?
Different. I mean, silver is different because obviously it's got that industrial component, which is a good and a bad. So it sometimes doesn't give you as much beta. It usually does. I mean, if gold goes up 10%, usually silver goes up by 20%.
Yeah.
The problem with silver, and this is one reason I'm not a silver, bug, is just because of most of the silver is a byproduct. And so how much silver they produce is a function of the price of the other commodities, which is good and bad, but you can't predict it. You got to almost look at the zinc price and all these other lead and whatever to know that, you're going to get more silver or less silver coming out. And then, but I think that M&A wise, people are looking, like the silver companies especially, are looking for silver dominant projects, but there's not a lot out there. So if you have a silver dominant project that is in a good spot, good grade, viable, that's probably one, to hold. But if you look and dig into the actual silver companies, the amount of silver they actually produce as their total revenue is not that much. It's not like 70 or 80%, because they produce a lot of base metals and they also produce gold. And their problem is growth in the silver sector. Because if they buy a deposit that's got a lot of silver, but it also carries a lot of base metals, they don't get that big leap in terms of silver exposure. So that's what I would say. And that's why everybody puts out silver equivalent and stuff like that, because they convert the gold into silver and the lead into zinc and everything like that. Like somebody like Pan American, what they produce is mostly precious metals, gold, not silver. But in terms of the reserves, they're mostly silver. But that's because they have two very big projects, one in Guatemala, Escobal, the other Navidad in Argentina, that are on care and maintenance that they've never been able to, one restart and the other one build. If they could, then that would be deposits that would be well levered to the silver price.
Yeah, but do you believe that silver producers are losing money at this at current silver price?
Yeah, I haven't. Like somebody like First Majestic. I mean, they're making a lot of money. I know off of one of their projects in Santa Elena, Ermitaño, but that's mostly gold. And also they bought into that project, the roasting facility at Jarrett Canyon in Nevada, which has been a loss center for them and for companies prior to them. So even if they were producing there, which they're not, I think it's on care and maintenance, most of that production is gold. It's not silver at all. So here's a company that, sold to the market that we're silver and we're Mexico. But now we have, the Mexican mining reforms that make it harder to explore there and more problematic to permit. And open pits have been on slow. I mean, people haven't got permits to develop open pits there in Mexico for a while. So, and Mexico is a big silver producer, so is that going to impact the silver, production going forward? That could be a deal. And Peru hasn't been great either, another big silver producer. So I can see the issues with potential production, but then you have some big base metal mines in Europe and in porphyries all over the world that will produce silver as a small byproduct, but still a lot of volume that have nothing to do with that aren't looking at the silver price with respect to how much volume they produce.
Yeah, you mentioned porphyries. My next question is copper. Is there a good amount of big porphyry deposits throughout the Western world? I mean, the grades are declining, or big porphyry deposits are really hard to find. What's on the table for the future of copper?
Near term, we obviously have had this problem with, China is still very important in terms of consumption, and near term, their economy has been, not doing as well as people would have thought post-COVID. So when they lifted the COVID restrictions, me and a lot of other people thought that, okay, now copper should go.
Yeah.
It didn't because, they didn't get that lift off because of their real estate market, all the debt it had. So that was problematic. And so copper near term, has issues. There's some production coming on. It's in surplus. But the problem is, in 3 to 5 years, a lot of these projects that people think are going to come on may not come on. One, because of permitting issues. Chile is being obviously more concerned about water and where people are sourcing their water, but that same attitude goes up all the way through the States. And then permitting, obviously, in the States is ridiculous right now. Resolution, the underground mine, high grade, Rio Tinto. I mean, when I worked as an analyst for Phelps Dodge in 2003, that we had that project coming in 2010. It's now 2023.
Mm-hmm.
We've got Rosemont with Hudbay that basically they can't build. The Pebble mine in Alaska that's probably going to have a hard time getting permitted. Trilogy also feasibility stage project in Western Alaska that needed a road, and NGO stopped that road. So yeah, endowment isn't the issue in some of these jurisdictions. It's just being able to permit the projects that we know of. So for me, copper consumption and supply, maybe the penetration of EVs will have an impact on that. But for me, the bigger issue, and one you could see, is the supply side, because you can see projects aren't getting permitted. You can see funding gaps. You
Exactly.
see Codelco's production profile going down, and they've taken on a lot of debt, and all these delays. So even projects that people have coming in terms of expansions highly probable are not so highly probable anymore. So a lot of the deficits that we have, in 2027, 2028 might be coming forward, making the market even tighter. And then we have this issue with concentrate. Where's that concentrate going to go?
Yeah.
So is China going to get it all? Do we have to build, because now people want to build smelters closer to operations. And so I'm sure the Americans would love the Chilenos to build smelters there. They love, Zambia and the DRC now, as First Quantum's got a big smelter there. So to get the cathode is what they want, and it'll be very difficult to permit another smelter in the States. So they're going to need the cathode, and so that smelting capacity is going to be a big issue and where it's located.
Yeah, yeah. And what about lithium? I know that it's not your favorite commodity, but what's your take about the current status of the market and what are you seeing in the next 5 years for lithium?
Yeah, well, lithium obviously this year everybody knows is going to be the worst, performing
Yeah,
commodities. But interestingly, the lithium equity LIT has outperformed it, even though it's down. It's outperformed. It's almost like lithium
yeah,
companies right now are catching up.
yeah,
But what is I guess optimistic is the amount of M&A, especially in Australia, that's been thwarted actually by an Australian billionaire, Gina Rinehart, on big projects like Liontown, and there's another one, I forget what it's called, but both those M&A deals, whether it was Albemarle or SQM trying to get in there, were thwarted. So that side of M&A always makes people more buoyant. I mean, bullish about the
yeah,
sector.
yeah,
And then we've seen all this investment and projects being generated in northern Quebec. And then you could see infrastructure being built in Bécancour between Montreal and Quebec City for a battery plant. Well, that battery plant's got to be fed by something. So, if it's from Quebec, that's basically what the provincial government would love to have.
yeah,
So you
yeah.
could see some kind of supply chains being generated and developed. But everything in Western Australia, is that going to go to the lithium processing facilities in China? Okay, that's probably what the Chinese are wondering. That's why they're investing $1 billion plus in the Salar de Uyuni in Bolivia. And my big issue is the direct lithium extraction. If that works, and it works on brines and stuff like that, where you just pump up the brine, filter it, take the lithium out, you don't take the magnesium, all the deleterious, pump the water back in so you don't have that ESG impact. That would have a significant impact on the market, but not just with brines like that we're seeing with the salars that have been, that are old and stuff like that. These will be brines like Exxon is doing in the Southeast that are there. And then you could just pump and these guys know what they're doing with respect to oil and gas in terms of pumping and actually filtering. And so I think they have a big comparative advantage. And if they could produce volume, that's my concern about the lithium market.
Yeah, I have one stock in my portfolio that is using that technology. I will not name it, and it will do that in Saskatchewan. But let's
Yeah.
see. Joe, please tell me what are your favorable jurisdictions and which jurisdiction should one avoid?
Well, I mean, usually what I look at is that I don't try to have a bias towards jurisdictions, but sometimes it's hard. The problem has been Central America is hard. We've seen what's happened in Panama. That's been happening for a while. That's going to end up probably like Escobar and Guatemala if they're lucky.
Yeah,
And these are small countries where mining has a big impact on the positive and probably a big impact on the negative in terms of ESG and visibility. You just can't hide it, behind something. So, so Central America is something I'm not crazy about. Jurisdictionally, if I go to the other spectrum, one thing I do like is Brazil. I do like that jurisdiction. And if it is in the States, Nevada, I still love that jurisdiction. Arizona can be problematic, but the big thing that you got to look at for, or your listeners, is if it's on private land. If it's on private land, it only needs state permitting. And so if it only needs state permitting, obviously it doesn't need the federal government, and it doesn't have this thing called WOTUS, which is the waters of the United States. So if you don't touch the waters of the United States, you don't need a federal permit from the U.S. Corps of Engineers. So if you can avoid all that, then your project would most likely get permitted within the state, because the state always likes development. They like mining. They're mostly pro-business. Most of them are Republican. So that works. I mean, Canada remains a decent jurisdiction, but now there are some issues in BC with changing the way people, acquire ground. They might have to do the pre-consultation, and if they do that prior to actually staking, that's kind of problematic. So, and then we have the Mexico mining reforms that are being implemented that make it harder for people to explore there. And also, open pits have always been an issue since AMLO's come in. So jurisdictionally, yeah, every one of them seems to have a bit of an issue, but you just have to wander through it and understand it.
Yeah, yeah. I want to hear about your due diligence on commodity stocks you like. What metrics are the most important ones for you, and what are the red flags that keeps you away from investing in mining companies, junior companies?
Well, people always focus on grade, which is good, but the problem is that metallurgically doesn't work. So even though I'm getting, let's say, 50% better grade, is it like, am I
Yeah,
only
you have to
getting?
have tonnage also. It's not all about grade. I agree.
Well, I mean, the idea with grade is that I need less tonnage, less processing, smaller plant, less capital to build it. But the problem is, if metallurgically it doesn't work, I don't get as much end product as I'd like. Then infrastructurally, if I'm in the middle of nowhere, then
Yeah,
everything gets a lot more expensive. I need to have a lot more working capital. I need a railway or a road, something to, if it's a concentrate, especially to get it out. And then the other problem is ESG footprint. So
yeah,
if I'm remote, it's going to be all diesel or LNG. And so that's going to be higher cost, but then in some places I'll have to pay carbon taxes, like in Canada, which will be a burden. And then so infrastructure is not what a lot of people think about,
hmm,
and then if you're selling an intermediate product, you're not gold, you're not selling a fungible product. Then the issue is like, how good is that concentrate that I'm selling? Is it high arsenic, let's say, with respect to, even though it might produce a 26-30% copper con, it might have 2 or 3% arsenic, because I'm concentrating that as well. But which smelter is going to take that?
yeah,
That's the other issue. So all of that comes into if a project is viable. In the interim, the stock price can still go up. So you can still buy it with that hype, knowing that later you'll have to sell it because it's going to turn once they start doing those studies.
yeah, yeah. And what about metrics like skin in the game, share structure? Is
Yes,
that important for you?
yes, share structure is very important with respect to how many warrants are out, how many have they issued, and what's pending. So there's no rush to buy into a stock that's got 5% of its warrants outstanding coming in that are well in the money. You just wait for that and back off.
Yeah,
There's no rush, because whatever they're going to release, positive or negative, most likely that's going to be sold, and that'll be a liquidity event for those guys. So
yeah,
that's important. Share structure, management, insider ownership is important. But then also, I like, in terms of the board, I want people that actually add value on the board. I don't want to see these big, huge boards where all these people are just friends of everybody and are just going to stamp of approval everything management comes up with. I would like people that, okay, if management's an exploration team, at this stage, maybe they need some engineers on there. Maybe they need a metallurgist. Maybe
yeah,
they need somebody who understands ESG. Maybe they need somebody who, looks at copper concentrates and knows how to sell them or something like that. Each individual adds value. And then I worry about it when they have 5 or 10 technical advisors. And I would say, well, don't you guys know what you're doing? How many people do you need? So that doesn't give me much confidence, even though they're trying to give me confidence by saying, look at all these people, but they're probably spending 2% of their time looking at the project. So
yeah.
I don't get much comfort out of that.
Yeah, Joe, what is your exit strategy? What gains are you targeting, and what are the time frames of your investing?
Yeah, right now we're targeting gains of minus 10%. But yeah, I mean, usually it's like if you get a double, you sell half. But some of these stocks that are now trading down, I had that opportunity and I missed it because I thought, well, this is just going to get better, and it didn't. because you do have that other side where you think it's going to go down and it just keeps going up, and then you go, oy vey. So, timing is probably, Al, doing all that work, timing is probably the most important thing in terms of making that return you want. Because I've got stocks that have 5 or 6 times, gone up, but I still own them because I think they're still at a good spot. Other ones that are down like 50%, I'm going, well, I think this will go down even more because I know that they have to fund. So I'll just get out of it now and cut my losses, which is what I did in the letter just last week.
Okay, fair enough. Do you see a bigger market correction or even wider meltdown in general markets over the period of next 12 months?
Well, I'd like to think it can't get worse than this year. And with the Federal Reserve sort of giving that sort of idea, and I think I believe it, that real rates have flattened to going down. I think that will help a lot of commodities, and it's also the cost of capital as well that help some companies, and that would make people consider to go into equities versus leave it in their savings account, let's say, or something like that. Because the other problem that we have is that people are thinking, well, do I buy this or do I buy something else? But I don't think at that point anybody it wasn't another. I mean, I know Bitcoin is at 52-week highs and doing very well. But I think really when the market turns, and gold has shown that, it's gold that goes up. It's gold that really has that biggest advantage with real rates changing.
Yeah, it makes sense. Final question, Joe, M&A, in which sector do you see the most M&A happening in the next period?
Well, I would say two. I would say gold, like especially with the intermediates. Looking at the capital cycles for some of these companies, to say, okay, what's the next project you're going to build? There's a lot of gold development projects out there. What gets taken out? The problem with that is that we've seen with Marathon and Caliber is that you're taking a 30% premium on a 52-week low, so it's almost like a liquidity event.
Yeah.
Because if that company, but what some people don't realize, if that company still wants to build a project and they had to go to the equity markets to raise that same quantum capital, they would kill the share structure. So in the end, it was a good thing, but it doesn't look that great. So what I would like to see is those stocks, turning, and then getting the 30% premium on top of that, not off of a 52-week low, but of a much better valuation. And that's what these intermediates have to watch for, because now maybe they can get it cheap, but it might not be that cheap in 6 months. That's the problem. Because if these companies can see themselves getting funded and see themselves building it themselves, they might do it if they got the right team. And that's what you got to look for as an investor. Are these people set up to build this? If they're not, you're kind of screwed. If they are, then you're in a good spot.
Yeah, definitely. Thank you very much, Joe. This was Joe Mazumdar, editor of Exploration Insights. Joe, thank you for coming to my show, and let's catch up sometime soon again.
All right. Thank you very much, Lucian.
Thank you very much.